right, mic check, mic check. I think we're just about good. Make sure everything's settled. All right, mic check, mic check. I think we're just about good. Oh, so we are officially good. That's what that means. Thank you guys so much for joining, and here we go. Hope everyone's doing well tonight. Just been working to keep improving things, right? Just like everyone else out there, trying to improve things in their life. Whether it's GameStop improving, it's yourself improving, like things always have to move forwards, right? That's a very general statement, but I think it's very true. I got a lot of stuff I want to go over with you guys today. Of course, earnings is coming up, so that's definitely a hot topic right now. To go through various stuff, GameStop, just markets as a whole. S&P goes to new all-time highs again today. Unbelievable. I mean, it's crazy. It's like the forever bull market. That's what I've started saying, like jokingly, but at the same time, it's like, look at this bounce since like late last year. Like it's crazy that the S&P has literally gone from let's say 410 to 520 in not even a 6 month span. Like that's crazy. That's actually nuts when you think about it. Like to really just like if you told someone like, oh yeah, the S&P is up like 25% in under 6 months, it's like, what? Like now it's the normal, right? With like this very volatile age we live in. But I feel like if you told someone this just a few years ago, right? Like pre 2020, they go, that's nuts. Like that means a guaranteed crash is coming, right? And now it's like I'm not so sure. Like you don't ever truly know, right? And I'm not saying like the market isn't ever going to crash or pull back, but I'm just saying we have this like crazy situation where there's just so much money that's been printed. Like literally 25% of all US dollars existing were created over the past like 5 years or so. Like rough numbers there, right? Like you could look for the specific numbers if you want, but the point is like there's just so much more money in the system and it's just flowing up. And that's how I see it, at least. Of course it goes much deeper than that, and there's like a whole conversation in itself with that, but that's just what I wanted to say to start out. And like seeing stuff like this, I didn't even know this was a thing. NVDL, double leveraged long Nvidia ETF. Like what the heck? Like crazy. And you see like all these like I've seen videos like the Uber drivers like trading cryptos, and like a couple people started asking me, "Yo, what's going on? What's the next meme coin?" And I'm like, I don't do that. When I say people, I mean like my friends. They're like, "Oh, you follow this stuff? What's the next coin, bro?" And I'm like, "Nah, like that's not the game I'm in. I'm sorry, I don't have that answer for you." But it's crazy, right? Like what a world we live in. I remember people originally say like, "Oh, this is just a fad," but now it's like, I mean, like it is a fad. Like I'm not saying like go put all your money in Bitcoin, meme coins. Like that's definitely not going to work out for you in the long run. But I'm just saying like it's just a new normal. Like oh, there's a crypto cycle. Like oh, obviously there's going to be meme tokens that run too. And oh yeah, like obviously there would be a 2x leverage like Nvidia ETF. It's crazy. And then I'm gonna hit the comments in a second. But one quick video, I literally just saw this was about to start, and like this is the most dope, but also most horrifying thing I've ever seen. Like Elon Musk showed Neuralink today that first patient in Noland Arbor playing chess in Civilization 6 with his mind.
Think it just became intuitive for me to
Crazy.
start imagining the cursor moving. Basically, it was like using the force on a cursor, and I could get it to move wherever I wanted. Just stare somewhere in the screen, and it would move where I wanted it to, which was such a wild. I think it.
This motherfucker literally just said, like, he's using the force to move his mouse. Like, think about how crazy that is. Like, it's the most scary. Like, some of the AI, like, and how it's evolving is the coolest but scariest thing ever. And I think it's more scary than cool, to be honest with you. But, it's one of those things like, genie's out of the bottle, cat's out of the bag. There's no going back, right? Like, AI is here to stay. And, like, that's why, I'll use it to create some images and have some fun and do some things with it, right? Because if I'm not using it, everyone else is anyway, right? And then you fall behind the curve. I mean, that's a very general statement, but I'm just saying, just because I'm using AI doesn't mean like I think it's this super like wonderful thing. Like I think there's good aspects to it, like anything else, there's good and bad, but like genie's out of the bottle, so there's no going back. And like you see like Sora, which low-key seems like they're just using YouTube videos to generate their AI videos, but it's like if that's not properly regulated, and you just look at how stock markets are regulated, right? If it's the same people regulating stock markets that are regulating AI, like I find that absolutely horrifying, to be honest with you. But it is what it is, right? Like it is what it is. What can I do? But let's hit the chat. Soljo, thanks for being here. Yo, Namac, yo, thanks for being here. Earnings gonna be good, or Soljo? I think so. But the truth is, no matter how good or bad GameStop's earnings are, right? Like I think we're never truly gonna know what's gonna happen in the short term with the stock price. Like the stock price can react any which way, no matter how good or bad. And I think history of GameStop has showed us as individuals that that can happen, and then also just how markets act as a whole, right? Like markets are typically just irrational in the short term. Although if they report a way better than expected earnings than, like the bogus analysts are expecting, and maybe even more so than the average individual is expecting, or just turn like a really strong profit in the quarter, and then that would mean they have a turn to profit for the full year of 2023. That might, signal to the market like, okay, this company's profitable, like they're in position. And I'm going to show you guys this later, which shout out to SHF ATM receipt for sharing this article. I'd never even seen this, and this is from February 20th, like exactly 1 month ago. So definitely excited to go over that later. But yeah, what a world we live in, right? What a world. And you don't ever truly know what's going to happen in the short term, right? And like that's why I keep a long-term viewpoint, because you don't know. You really don't know. And like I would like to think that it could go up a lot, and it would make sense for it to go up a lot if the earnings are much better than expected on the bottom line, and just improving in a way that it's like the proof is in the pudding. The market should react, right? But you don't know. It could dip like 10-15% for no reason, and then go up 100% over the course of the next month, right? Like you just don't ever truly know. That's my point. And that's why I think it's important too to like really read the numbers and understand, because that's where you have to make a determination. It's not just like there's so many people I know that are like, when I say I know, and I talk to people like friends and like friends of friends who are like follow stocks and whatnot, and like they dabble in it, and they're like, oh yeah, but like look at the chart. And whenever I hear someone say that, I'm like, all right, like you have a long way to go. There's a lot more you should be thinking about than just, well, look at the chart, man. It's just, it looks prime for a bounce. I'm like, there's so much more that goes into that. And, shout out to all of you guys, because I feel like pretty much everyone watching this doesn't just think like that. Like, oh, well, look, the chart just goes like this, so it's going to go like this soon. Like, most people watching, I feel like realize, it's much deeper than that. And if you don't see that yet, that's totally fine. Stick with me. Keep showing you guys stuff. But let's get back to the chat. I'm saying for options though, Soljo, yeah, there's probably money to be made, but again, options not really my game. I dabble with them ever so slightly here and there. Like I've sold a put, right? Yeah, sold a put outstanding right now on GameStop. Like I don't want to say the strike or the particular amount, but the put is below the current price. So as long as GameStop stays above that price, like I'll get to keep the premium, and I'm earning high interest on the underlying cash in a money market account. But if GameStop goes down to a certain price, then that put will be exercised, or yeah, so it'll be exercised. So then I would be forced to buy the 100 shares at that predetermined price. That is the option, right? So that's selling an option. It's a little bit different, but I haven't bought any calls in a long time. That's just not my cup of tea. You think RC pushed off earnings so they can smash it out of the park? Possibly, Soljo. Possibly. I think it's one of those things with the earnings date. Like maybe there's reasoning. I haven't seen any like direct evidence that would make me think like, okay, like there's definitely a reason it's this particular date or anything like that. So I don't think too hard about it. Like I'm more so curious what the numbers are going to be. King Tetron in the building. Ryan, good to see you, man. You shared a name with a pretty awesome Ryan, right? So two awesome Ryans, you and Ryan Cohn. It's like a week or two late. I think the dividend is coming. Maybe, Soldier. It's possible. That's a shareholder initiative, right? Or a shareholder value initiative, rather. So it's possible. I just don't think they're quite in a spot to do that yet. Because you have to think about like shares outstanding. They would have to pay that much, right? Every single quarter times the shares outstanding times 4. That's their yearly payout. So then you have to consider, and you'll be able to start doing this, right? And something we'll be able to start analyzing in the future, where if they did do a dividend, right, just for example's sake, you would then want to look at like what's the payout ratio, and the payout ratio, like usually you can find it in here for companies that already pay a dividend. let's see, payout ratio, right? Obviously it's 0% because they're not paying anything out, but payout ratio is like percentage, I believe, of net income. I'd have to double check that, but I believe it's percentage of net income that is actually paid out to shareholders. So like if you look at a company like Pepsi, right? Let's see, statistics. Payout ratio 75.38. So they pay out about 75% of net profits to shareholders, right? And the payout ratio would then have to be considered and factored in. You don't want a super high payout ratio for just first starting to implement a dividend again, right? And Pepsi's is relatively high, but their business is relatively stable and not really going to change dramatically today, tomorrow, next month, or even next year, probably, right? So that's kind of the situation there. It's always a little bit different depending upon the company. Dividend or stock buyback, which do you prefer? Do you think we get one or the other? Jackson's, thanks for being here. Number one. Number two, I truly don't know because, we were discussing this a little bit on the last stream, and it's like dividends would be nice because it's like cash flow. And I think cash flow in an inflationary world is extremely important because it's like you're going to choose your assets here and there, but you want money flowing in, right? Because there's just money flowing everywhere in a world with a lot of inflation and just liquidity. And, I'm just saying that very generally, but my point is like cash flow is always nice and incentivizes individuals to continue to hold a stock they like because they're getting payout on owning that asset, right? It's the same as if you own real estate and then you're getting rent payments, like you're getting cash flow on that asset. So then cash flow gets factored in. Maybe people value the company in different ways. Other institutions might be interested, right? But then on the other hand, I think, well, when you look at the share situation, does buying back shares make sense? Because there's already like a fairly limited amount, and then it's a whole other conversation itself, and I'm going to touch on it a little bit more later about what's really going on with the shares, right? DRS numbers seem a little bit fishy in my personal opinion, and the market structure is just bizarre in itself, right? Like when you realize that it's all just numbers on a screen, like you never think of anything the same. Like that's all I can say. Like I say that to people sometimes. I'm like, you realize like the whole banking system and like finance and everything is literally just numbers on a screen. Like it's all fugazi, it's a wazi, it's a woozy, right? Like obviously it's not that simple, but like if you boil it down to like super simple terms, like that really is what it is. It's just numbers on a screen, right? So what a world we live in. What a world. So, where I was going with that to finish my thought is I like to think a share buyback would make sense and it'd push the price higher because there's tons of individuals that like the stock. There's a lot of general ownership of the shares. But if there's all these strange things going on, who's to say share buybacks wouldn't play into that as well in the sense like they wouldn't actually do anything because maybe some strange things are going on with the stock price, right? So then I kind of lean away from it. So I don't know. I'm really not sure, and I kind of feel like my most current thought, like at this exact moment in time, is neither. Let's just keep improving the underlying business, going step by step. And when I say let's, I mean GameStop's management team, right? Obviously not me. I'm not working at GameStop, but I see it as they want to just keep improving and turn a profit every single quarter or at least get into Q2 of next year. Maybe Q1 comes in a slightly negative EPS, right? Of like just like a few cents negative, just miss a net profit. But then Q2 comes in just slightly profitable. Q3 comes in pretty decent. Another strong Q4 in 2024. And 2024 is even more profitable than 2023. I think then in that scenario, towards the end of 2024, or, if we're talking about the 2024 annual report, it'd be coming out around this time in 2025, right? Because it's always forward looking. So if that was the case, then maybe that's the time where it makes a little bit more sense. And, at that point, the balance sheet is even more bolstered, or bolstered, is that the right word? It's just looking even stronger. But then also a factor is Ryan Cohen and the management team making any moves in regards to investments being made. There's been some speculation he's going to buy Bitcoin, he's going to buy other stocks, like he's going to buy alternative assets of some kind. He's going to turn GameStop into the next Berkshire Hathaway like Warren Buffett did because Berkshire Hathaway was originally just a textile company and he had some kind of falling out with them. So he's like, you know what? I'm just going to buy all your stock. I'm just going to buy up the whole thing. And then when he bought up the whole thing, he was like, all right, like I'm paraphrasing here, but kind of like, yeah, I did that out of a little bit of pettiness, and I'm investing in other companies anyway, so why don't I just invest in them under this company because I have pretty much full ownership of it. So then I can just start investing in other things, and that long story short, like is where Berkshire Hathaway came from. It's not like he was like, oh, let me start a company called Berkshire Hathaway and just invest and grow and keep reinvesting into different things. No, he just fully acquired it and then essentially turned it into what it is today. And maybe Ryan Cohen does that, right? Like I truly don't know. I don't think we will ever know until there's signs showing that, but it's speculation, so it's hard to say. It's hard to say. It's hard to know. But loud and clear, yes, sir. And hold on, make sure I got the all chat so I don't be missing anything. Fresh Maker, ready when you are. Yes, sir. Thanks for being here, Fresh Maker. Damn, I had to catch up on the chat. You guys definitely put that at the beginning. Man, I don't know what we're getting, but I got to see something. I know what you mean, Soldier. Yeah, it's hard not to get antsy sometimes, but, I'm realizing the older I get, and, I'm not saying this like, oh, I'm this very wise old man. I've lived a bunch of life, but doing the right things and getting to the right places, I think it goes in business and, whether it's a small business, it's a large business like GameStop, it's yourself as an individual. It's about like doing the like the boring things consistently. Like it's like slow and boring gets you to where you need to be. Like that's what I'm starting to realize. Like sometimes I just slow myself down and just focus on doing the small things right, and then I feel like my day-to-day life just gets smoother and better, right? And like right now, something I'm trying to really focus on is better attention span. So when I'm doing something, or even if I'm like watching TV, right? Like I gotta tell you, like any person my age and probably all ages in this day and age, right? When you're watching TV, you're like also on your phone, you're just scrolling, doing whatever. But it's like you're giving yourself these crazy dopamine hits constantly by just swiping. And I'm not saying I'm perfect and like not doing this, but I'm starting to become very aware. I'm like, okay, if I just leave my phone in the basement while I'm watching TV right here, like, and I'm trying to relax, like, I'll actually relax a lot more enjoying like a 30-minute show without scrolling at the same time. And then I will sit there, right? I'm finding I'm sitting there and I'm like, going to grab my phone like, as if it's next to me, and I'm like, oh, where is it? Oh yeah, I left it upstairs. And then I'm like, oh my god, like my brain is so fucked up. Like I gotta fix this. You know what I mean? So slow and boring is how great things come to be. That's my opinion, at least. It's something I'm starting to realize, and I want to do great things in this world, and I realize it's going to take time, and like I get frustrated at times. Like I want it to just be now. I want to just do all this and all that, and like not even just necessarily YouTube, but just figure it all out. I should have all the answers. When I was in high school, I thought, oh yeah, when I get into college, like I'm gonna be doing so much more. I'm be leaving everyone in the dust out here, and this and that. And now I'm like, damn. All right, like this is gonna take some time. Like it ain't perfect. There's gonna be ups and downs, right? But completely digress there. So let's get back. Dividend over stock buyback. Yes, Freshmaker brought up the great counterpoints last stream when I was saying, oh yeah, like stock buyback, and it's like, wait a minute, maybe not. So we'll see, right? But the rip after Powell's speech was insane. Absolute clown world. The crash will be biblical. Infinity Nova, thanks for popping in. Yeah, it's literally crazy, right? Because actually, I am going to touch on this, and I feel like might as well right now. Like the rate hike meter, or let me get through the chat, and then I want to touch on this. Like it is delusion, right? But at the same time, it's like the world we live in. When I say that, I mean like I'm conscious of the fact that it's delusional, but at the same time, it's like when is it actually get to the point where there is a crash, and when it does crash, like how bad is it truly, right? Like, and it feels like it's gonna be really bad. What was the thing I saw today? I think I had replied on it, where it was like Wingstop, something insane. Oh yeah, and I said the Ryan Al Ghib, or I was it like Asa Ghib, like the Messiah in Dune. Dune was pretty good, but I just thought it was funny because I was like, oh yeah, I know Dune. Oh yeah, so pretty alarming considering the fact Wingstop is trash. My personal opinion, I think it's so overrated. I don't know how people like it. I haven't had it in a long time, so maybe it got better, but like Wingstop, kind of whack in my opinion. Like I'd rather get wings pretty much anywhere else, or if anything, just freaking buy them frozen in ShopRite or wherever, and just throw them in, and then at least you have decent wings, right? Nah, whatever. Point. I'm completely digressing here, but the point is, Wingstop, a chicken wing company, is now up 84% over the last year, and we're 10 billion, trading at 144 times earnings and tripling the S&P 500 returns. Who needs AI when you have chicken wings? And it just kind of shows you the type of market we're in. But then I also see that, and I think, and I'm like, isn't it crazy this crazy market we're in, and GameStop's still so beat down, with a strong balance sheet, about to turn a profit, not suffering from interest rates, actually benefiting in a way. I mean, that's arguable take, right? When I say benefiting, like they're at least able to earn on their cash reserves, cash equivalents, marketable securities, but obviously the money's probably inflating away, or the value of the cash is like being inflated away more so than that rate. But my point is like they're not being hurt by like high interest debt on their balance sheet. And you would think like and the market would foresee like the uh, bottom line getting better. And with all the money flowing into all these other stocks and doing all these other crazy things, it's like GameStop's still just floating low. It just seems so odd, right? Like it just seems so undervalued. You can push back, doesn't change time from Q4. Let's talk about trade 385 briefly as well. Ryan, give me some more information on that. I'm not too sure what you mean, trade 385. It sounds familiar. I feel like I saw something on it, or I don't know. Give me a little bit more information. It'll ring a bell. But so what do you do if Jimmy had a bad Q4? Move the goalpost to Q1? Echoes, thanks for being here. You might not like GameStop based on that comment, but that's all right. You're still tuning in Tetron. I'll take it. No, if Q4 isn't as good as expected, I'll definitely be surprised. But so be it. I'm going to see why did that happen. Is there any commentary on it? What's ahead? Just look at the information as to why that is, not just like, oh, it's bad or, oh, yes, it's good. Like, I want to figure out why. And, that might not all just be initially in the report. It might take some time after, but that's what I'll do. That's what I think it's all about, constantly doing more research and due diligence to figure out more and learn more. But brokers worldwide have over 200% of the float in the retail accounts. The short squeeze will be legendary, but they would need to justify it. The case has been building for years, closer to 2024. Good points in Infinity Nova. I mean, it's bizarre, right? And like that brings me to a couple of other things I want to show. How 1 week before GameStop earnings report, the most amount of shares in 4 years becomes available and then disappears. Like that's just not normal. And like you could say like naysayers could say, oh, it's glitches, it's strange discrepancies in the data because of something that changed behind the scenes, but it's still discrepancies and it's just still strange. Like how does 3.4 million shares in 15 minutes just disappear, right? Like where did they go in terms of like shares available to be lent out? Like it's just so odd. And I do think there's a lot of strange things underlying with the shares, but I don't go too deep into that because I don't feel like I truly have enough knowledge. Like I'm learning more and more about market structures, and it's just not a rabbit hole I want to go too deep down. And I'm not saying like I don't think there's strange things that go on in our markets and just how everything actually isn't just sus and weird. I'm not saying I'm like turning a blind eye like, oh, that could never be. Like everything is definitely perfect. It's totally functioning as it should be. Our markets are free and fair. I'm not saying that, but I'm just saying I don't know. Like I just know there's strange things going on, and I just focus on what I can focus on the most and understand the most. And to me, that's the numbers and just improving the business when it comes to GameStop and just economics as a whole, right? But my man, good to hear your voice. Kev, thanks for popping in. Good to see you here. Patience, making a system for the boring stuff so it becomes a natural habit. We don't think about that. It's true, John. I'm John Lacey. It's true. Thanks for being here, by the way. Bro, you're get your wings fresh. I don't trust these food companies anymore. You're right, Soldier. Yeah, no, I would definitely rather get fresh wings because you're right, and you also start to realize like what's in all of our food and like it's crazy. Like it's like everything is like basically processed. Like it's actually nuts. But remember to drink water now. 420 bong smoke. Thanks for being here, dude. I appreciate that. Like you're like my hydration buddy. I always be like, yo, got to drink some water. Oh, should got to cover this up. Not sponsored. I should put Tetron here instead. It's the official Tetron water. So no free ads, right? No free ads. I say that as I'm drinking this water, wearing this sweatshirt, right? No, I'm just kidding. But check out on Super Song about Trade 85. It's trending currently. Not many people know slash knew about it. Yeah, let me check. Let me check on that a little bit, Ryan. But yeah, I definitely want to look into that a little more because I did. I know I saw it somewhere. It must have been a tweet, or I honestly barely go on Reddit these days. But it's crazy. The Reddit IPO is about to come out, and from what I've seen, just at a glance, it seems like they spend a ridiculous amount on just everything for no reason, right? So I would never touch that stock with a 10-foot pole, but that's just my opinion. So yeah, that's suspicion self. Quick update on the interactive brokers. Shares available to borrow on the platform. Blue, volume of shares traded. Dark green, closing price. Dark gray, and borrow fee red. So where I thought there would have been the giant blue one here. I guess it's not quite visible, or maybe if you zoomed in. But it's the first time in a long time we've had that many shares available to borrow. Like it's greater up here, right, than any recent number. And then according to Kevin Malone's tweet, which I actually just X out, but it was the most since pre-January 2021. So you can think what you want of that information. And then over here, like who bought 1 million shares off exchange after hours or 500,000? It's so bizarre how that happens, where it's like just such an insane amount of shares in just such a short period of time, and especially in pre and post market trading, right? That's a time period where markets are illiquid. And I personally think GameStop stock, the shares outstanding are illiquid. But then on top of it, when you have a stock that already appears to be illiquid in terms of the shares, that much volume coming in at one time, like how does it barely move the price? Or just as if nothing happened, right? As if that giant candle of volume wasn't there. Like it's just, again, like I'll let you think what you want of that, but it's just so like people say, and like we're gonna go through Peruvian Bulls thread over here, and he brings up some excellent points where it's like people think individuals that like GameStop are just like pounding the table like it's not fair, it's not fair, but like it's not like that's what people see on the surface, but like that's so not what it is. And like I'm excited to go through this thread because I think he brings up some good points. Nothing against Conway Yen. I don't really even know this individual. Like I'm following them, but I follow a lot of people who followed me, especially more so in the beginning. So maybe I should unfollow after reading. I don't know. I don't know too much about this individual, right? So I'm not really trying to get into any kind of drama or anything, but I just, from starting to read it, I was like, he brought up some great points about GameStop itself and DRS, etc. But yeah, so talking about the markets really quick and then getting back to GameStop. So now the market is just forecast, like it's being forecast only 2 rate cuts from this year. Originally, it was like going to be 6. Just 3 months ago, the market saw up to 8 rate cuts this year. That was 3 months ago, right? But again, we talked about the S&P and what's going on with it. So that's probably a factor a little bit. 3 months ago. Oh, that's not the 3-month chart. Yeah, look at how much the market's moved in even just 3 months, going from like 473 to 520. So as the market keeps ripping on, then they're like, okay, probably we're not going to cut rates because everything's doing so well already, right? But we have this crazy market where it's like, all right, like don't worry, we're not going to cut rates, or not, don't worry, but okay, we're actually not going to cut rates for even longer. And then every time they push it out, the market rallies more because it's like, hey, they're not cutting rates. Like it's such a bizarre world, right? And how everything's going, but as we head into the March Fed meeting today, interest rate cuts are far from certain. Like there's a 1% chance going into the meeting today, and obviously, meetings happen now, and there was no rate cuts. So the reality is that inflation is back on the rise, and the Fed cannot afford the pivot yet. The Fed pivot has disappeared, and this image was number of rate cuts this year. The projected amount dropped by 3.3 according to this chart over the past few months. And I like this account, Kiyosabi letter, or Kiyosabi. Kaba, Kabasi? I don't know. I don't know how to actually say it, right? But they always put out some decent information. And the Fed leads, like a summary here. Fed leads rates unchanged for the fifth straight meeting. Continues to expect 3 interest rate cuts in 2024. Core PC inflation forecast has risen to 2.6. Still above the 2% target. Fed says inflation has eased but remains elevated. That seems to be the new thing. And don't forget how Secretary, oh my goodness, what's her name? Janet Yellen goes, oh, I regret calling inflation transitory. That was like their whole thing. And then suddenly, oops, yeah, I shouldn't have been saying that. I didn't know, my bad. I'm only, like the secretary that's supposed to deal with Secretary of Treasury that's supposed to be, know the most about this stuff out of some of the most of this stuff out of all the people in this whole country, right? Because I'm Secretary of Treasury, but nope. Just oops, my bad, transitory. But Fed does not expect rate cuts until the greater confidence inflation is moving to 2%. So now it's not even at 2%, it's moving towards 2%. And they only see two rate cuts in 2025 and fewer cuts in 2026. So fewer than two is one, unless it means fewer than expected originally. But that just means like elevated interest rates are here to stay. And even if, let's say, the Fed cuts three times in 2024, two times in 2025, two more in 2026, and if they're only 25 basis point cuts each time, right? Altogether, right there, I just counted seven cuts. So that would be like 1.75% cut. You still have an interest rate of three to 3.25%, right? Which is still fairly elevated. I mean, historically on a super long range, not so much so, but if you look at my lifetime, right? Like since 2000, rates haven't been that high for very much of the time. So, yeah, it's crazy. And every time I read about stuff, it just boggles my mind more. And that's why I keep reading about it, because I gotta learn more. As long as my mind is boggled, like I'll keep studying and learning. But reducing rates too fast could reverse inflation progress. Interest rates are currently likely at their peak. Makes sense. Oh, I thought it was like, oh, we're not, I read that wrong for a second, but yeah, that makes sense. I don't see a time in the near future at all where like, oh, let's raise rates even more. Like that would be pretty wild. Then I think the market would absolutely flip like very quickly, very much so, because market's always forward looking and it would not be pricing that in, so to speak, at all, because it'd be totally out of left field. Unexpected weakness in the labor market could warrant a response. And then I remember seeing a thing where it's like, oh yeah, by the way, the January jobs report was inaccurate by like 50,000 or something, some absurd number. And it's like, oh, very nice that it's already come out, it's already been reported, and like what was compared to for February, like when February came out, it was compared to the January numbers, in some instances. So, oh, actually, we just made a mistake in January. Oopsie. Like, you know what I'm saying? Like, it's crazy. Fair to keep rates higher or longer if needed. Seems to be the case. Need greater confidence. Inflation's moving to 2%. Fight against inflation is not yet over. Yeah, the thing about inflation is it takes a long time, right? It takes a long time to come into play. And when I say it takes a long time to come into play, I mean money printing that was taking place in 2021, 2022, some of that is still truly just starting to circulate in the system because money literally makes the world go around. Like it literally circulates everything. Like everything's like a good or service, right? In some sense or form. So as long as the money's flowing, right, it's gonna flow more, and then like inflation is like a delayed effect. Like I forgot the exact quote where it's like inflation is like drinking alcohol. It's all good in the moment until like everything hits the next day, and then you're like, oh, what was I thinking? What was I doing? And it's the same with money printing, right? In a sense, right? I didn't come up with that. I forgot the exact quote or like who came up with that, but Supersonic is infiltrated by short hedge funds. Citadel employees are mods. Coffee, donuts, and Homer. Thanks for being here. Good to see you. Yeah, I've heard some things like that, and I mean, can you be surprised, honestly, where it's like you have all these accounts all over X, Twitter, whatever you want to call it, and Superstock was one place where tons of individuals like talk about one particular company, and if you wanted to skew the viewpoints of some individuals, what other place would you go? Where would you go first, right? That's what I'm saying. Like you would go there first. So it's unfortunate, but in a way, kind of sort of expected. But I look at it as like it is what it is, and like I'm just gonna do what I do. You guys are gonna come here, which I think is awesome, and just say what you think, and that's kind of what I'm realizing the community is. Like, yes, as like a community, so to speak, on one platform, but it's about like the individuals speaking to each other. And I don't like to use the word community too much because it's not like, oh, we're all going to get in this together and make this thing happen, right? Like market manipulation. It's not like that. Like it's like tons of individuals who see a lot of the same things going on and believe in an individual running a company that also likely sees these things going on. Like it's a very rough explanation. And that's just my opinion, but yeah, it is what it is. Yo, Tetron, happy you're streaming today. Scott, Thanks for popping in. Yes, I'm happy I'm streaming too because I had somewhere to go tomorrow. So I'm like, all right, I did the last two Thursdays. Got to make it happen this Wednesday. But I'm really thinking to like just start streaming more because I feel like lately I've been doing too much thinking and not enough doing. So I should just stream more. And, it's not going to be perfect. And some days would be more exciting than others, right? Like the more you do stuff, the more, or I would need like more information, and obviously I'm not saying I'm not going to try, but I'm just saying maybe I'm thinking too hard about it and everything that I'm doing, then it's like I should just go. And I'm gonna make mistakes along the way, and like I'm just gonna try and keep it real with you guys. We're gonna make a mistake, like he's like, hey Tetron, like just so you know on this, and I'm like, all right, like this is a good point. Like I didn't realize this. So I'm not gonna be like, how could you say that? Blocked. You know what I mean? Like I feel like you gotta move quick in this world. I'm trying to move faster, and the reality it is, I'll make mistakes sometimes, right? Everybody makes mistakes, especially when you're trying to move quick. And I think the big thing is to just like own up to them and respectfully be like, oh yeah, like on this date, like I said this, but like actually now I understand it was that and not this. So trying to kind of have that approach going forwards. But let's get back to GameStop because now I've completely digressed to just macroeconomics and the markets as a whole. And I'm still trying to just wrap my head around it every day. And I'm fortunate at my age to have the experience I do, like in stocks. And to give you perspective, when I first started following the stock market, even like reading anything at all, was right around here. And I remember this drop was happening, like, oh, we're in for a recession. It's been about 8 years. Every 8 years or so, there's a recession. And I'm like, maybe I shouldn't buy stock. Now's not a good time to get in. So I just started dabbling. At that time, like I literally put like $100 in a brokerage account. And I'm a freshman in high school, and I'm like, this is crazy. Like I'm about to buy stocks. Like I'm in the big leagues now. And imagine I just put everything in the S&P 500 this whole time, right? And look at the return I'd have. I mean, obviously, I didn't have a lot of money to invest. So, like, what would $100 at that point now be worth? Including dividends, it's up to 520. Maybe I'd have tripled my money. My 100 would have became 300, right? But anyways, I have this much time in the market, and the S&P 500 goes back way farther than this. It's just the SPY ETF. But my point is, like, the more time you have in the market, the more you learn to understand, and you just get better at it. And I think that's just the reality of it. It's kind of like back to what I was saying before. Like it's slow and boring to get more knowledgeable, and like every day you're seeing it move, and you see this, and it looks so like, oh, it's this and that. I could study every little move, but when you zoom out, right, like these 3 months are so minuscule to like everything as a whole. And like again, I'm like completely digressing here, but it's all about learning more. That's really my point I'm trying to make with that. And all right, now that I've gone through all my macro stuff that's been on my mind, and also another side note, Chipotle doing a 50-for-1 stock split. Like what a large split! Like such a large number. I mean, it makes sense that their share price is like 30, not 30, 3K. So it's going to be going down to like about 50 because if you divide by 50, that would give you 50. So roughly, I don't know, maybe 60, but so let's go through Peruvian Bulls thread. And again, I don't know anything about Conway Yen. So no disrespect. I'm just reading through the thread for the GameStop points. And then I want to go into this article, GameStop's quest for modern operations, how unified tech and AI transform their frontline experience. Looks like this is the company that GameStop worked with to accomplish this because it seems like a blog of their own. This is actually my first time reading this. Like I came across it today, but I didn't actually read it yet. So it'll be fun to react to it with you guys live. But let's go through this thread first, and let's hit the chat one more time. GameStop to be paying dividends. Swishman, thanks for being here. There's speculation of it. No certainty yet. I think it's possible, but I don't think it's something that's going to be announced on Q4 earnings or the full year earnings report. I'd be very surprised, honestly, if they did. But I wouldn't rule out the possibility in maybe a year from now or so, roughly, potentially, allegedly, maybe. We'll have to see. But so what does trade 385 teach us, Noah? All right, let me look at that too. Let me go through this, and I'm going to pull up trade 385. Different announcement unlikely. Riding code is always favor responsible growth, and Divi would be weak in the balance sheet. Need that cash to buffer acquisitions, investments, and or just safety. Yeah, no, it makes sense, Scott. Definitely makes sense. And I feel like that's where I think it'd have to be a little while out, where they want to be even more so built up and in just a better spot to do that, if that's ultimately what they want to do. But if he does kind of go the Berkshire Hathaway / Warren Buffett approach, then at the same time, it's not actually going to be like something that would probably be done ever then, right? Because Berkshire Hathaway's never ever paid a dividend, and Warren Buffett's whole ideology is it's all about just reinvesting in the company itself and picking the next investment, etc. Okay, water, and then we're going into this thread here. All right, so time for a thread on GME, DRS, and the morality of markets. As someone who went to college, got degrees in finance and economics, and went to work in corporate fintech, I understand these people. What the GameStop apes say sounds ridiculous. We were taught that markets are efficient, regulators are good. I love Peruvian Bull, and I appreciate a lot of the stuff he puts out. But the one thing I disagree with, like, I don't like the term ape anymore. Like, it just makes it sound like someone who's just like blindly, like, oh yeah, like I'm just in it because everybody's in it, right? Like I'm just aping into it. Like that was like an old term. And when I think of apes, I think of AMC, all the stocks that have come and gone, etc. Right? But it is what it is. Not everyone has to agree with everything, and I get what he's trying to say here. But anyways, we were taught that the markets are efficient. Regulators are so good. Efficient market hypothesis derived from random walk hypothesis with a few modifications. The concept first traces to Chellier, however, in modern finance, has been developed basis of research during 53 through 65 as a theory. The concept can be traced. Okay, blah blah blah. Became a central piece of finance. Research thereafter, 1987, started to question the validity or how valid it is for efficient market hypothesis. Emergences of behavioral finance, especially now, so I think more than ever, is like meme coins and just hype trading, and the fact that everyone has access. Like when people didn't in the past, it used to be like you saw what the stock traded at for the day in the newspaper when you came home, which is crazy to think that's how it works. And now, like at any time, right, I can just type in like GameStop stock. Uh, but became central. Already got that. Heavily bruised but not yet knocked out. The fight continues. Shifting goalpost strategies helped it become from knocked out and may rather save it in one form or another. Efficient market hypothesis of the 1970s, however, dead even the writings of its proponent. Okay, so seems like this Peruvians or just kind of trying to give context of what efficient market hypothesis is. It's just that what I learned about in college, it was like just that markets are always truly efficient. They're always forward looking, and it's just things are always being priced in because people are always reacting based on what they think is going to happen. So therefore, it's the efficient market hypothesis. Markets are always efficient. It's just about who's seeing what. That's like a very general definition, but these facts were pounded in our heads so often that we developed rationalized mechanisms to explain why things happen. On the face, the GME phenomenon seems like a bunch of angry, uninformed retail investors who want to shake their fists at the system that they do not understand. The truth is, the trade vibros who speak like this do not understand GME and were not there during the run-up. What they understand is what they've heard in the media, what they were told, and they filter the world through their own biases that the market is quote unquote always right. To them, the GME fiasco was an overly shorted company that got a bunch of retail attention and the shorts covered, and now these investors are bitter and angry at the system and wish they had made more money. This isn't the truth. In fact, the SEC themselves admitted as much in a report released in October 2021. The massive volatility and price swings in GameStop in January was a result of retail buying, not short covering. Cites the report itself. The SEC admits that this was retail and perhaps other institutions who wanted to squeeze some big whales who got caught with their pants down. See the last sentence, very telling. Let's see here. Whether driven by a desire to squeeze short sellers and thus to profit from resultant rise in price, or by belief in the fundamentals of GameStop, it was the positive sentiment, not the buying to cover, that sustained the weeks-long price appreciation of GameStop stock. So that says it wasn't shorts covering that was pushing the price up. So it wasn't technically a squeeze by definition of this report, right? But it was actually positive sentiment. And again, that's what the SEC report. It's not what I'm saying, but that's what the SEC report specifically says. And to read the whole thing, however, it shows that such buying was a small fraction of overall buy volume, and that GME share prices continue to be high after the direct effects of covering short positions would have warned. right? Or wand. The underlying motivation of such buying volume cannot be determined. Perhaps it was motivated by desire to maintain a short squeeze. Whether driven by a desire to squeeze short sellers and thus to profit from the resultant rise in price or by belief in the fundamentals of GameStop, it was a positive sentiment, not the buying to cover, that sustained the weeks long price appreciation of GameStop stock. So I guess I should have read the whole thing there, but I'm sure you guys have seen that before. I'm definitely not the first to talk about this. Whatever reason, we remember in real time that what was happening. As the stock price went up, cacophony of media, interesting word there, began to sound about this quote unquote stupidity of retail and why the squeeze was never going to work. Tomorrow at 11:30 a.m., Citron will live stream the 5 reasons GameStop GME buyers at these levels are suckers at this poker game. Stock back to $20 fast. We under short interest better than you, and we'll explain. Thank you to viewers for positive feedback on the last live tweet, which I found funny. In hindsight, obviously it's hilarious because that was right before it really exploded. And then also like they canceled the stream. They're like, "Oh, technical difficulties." And the day the stream was supposed to be, it went up like a ton or something insane. But the sap continued to the point that Ortex, who had published short interest data, changed the way they calculated it since many retail investors saw the 140% short interest and aped in. Reported short interest will never again exceed 100%. Keep this in mind as you monitor GameStop's short interest, failure delivers, and borrow rates at post stock split. Short interest reporting is now calculated differently. GME borrow fees, shorts never covered. They covered through manipulated derivative strategies link. GameStop stock split. A comparative look at Tesla stocks. Okay, so this is just summarizing the post that they made here. So reminder, short interest reporting is now calculated differently. As we track the effect on GameStop stock split dividend on short interest, borrowing rates, and failures delivers, remember that S3 has changed the way they report short interest, and it can no longer exceed 100%. And never forget when, what did they say? S3 tweeted out something like, if game or put one on CNBC and said, if GameStop goes over $30, it could go parabolic. And like that very next day, it went over 30, flew up to like 36, and then closed the day back down at like 30 or something very insane. And we haven't seen volatility like that in a long time, right? I forget exactly when that was at this point because it's like all the months and days, they all start to blend together, right? When you're a long-term investor. But that was interesting, right? It's like, why would S3 come out and say that? Like, when do they ever come out and say that about anything else? And again, you can think what you want with this information. I'm just saying it's odd, isn't it? It's certainly odd. But the 140% wasn't even the true number. Some FINRA data feeds had the number above 220%. Casual clothing, some others even had it at 313. This begs the question, to what extent does shorting become abusive? Over 100% short interest means by definition that not every short has a low key, because by that logic, you would only be able to short the float once over and then run out of borrows. And for this issue, claims phantom or real, it doesn't matter because shares are fungible. This is illogical on its face. The entire point of buying a share in a company that you own is belief that you are getting a piece of ownership in it. So you believe in the fundamentals and you want to see the company succeed. The company has a limited number of shares authorized. So if more and more market participants view the company as valuable and buy, then prices go up. Too bad, so bad for the shorts. Instead, imagine this individual bought a share of Apple. Let's say Apple has 100 shares, but instead of buying a real share, he buys it from me. I'm the new broker. Let's say this example, Tetron Brokerage. I created a naked short out of thin air and I sell to you. Now there are 101 shares out there. I provided you with quote unquote liquidity in the form of a new share that you wanted right away, but I also de facto diluted the share count of the company. With more shares trading, the stock price doesn't move. The company, which would have seen higher prices and could get the option to raise equity, now does not have the option. The broker, me, gets to pocket the money. Pretty neat, ain't it? And that's also kind of going back to the point of why maybe repurchasing shares isn't what's best for them, just given what's kind of gone on with this company over time, right? So that's kind of where I think about it. And then I actually ran a poll on Twitter, and it was literally, I said, should GameStop repurchase shares? Yes or no? Literally, it was nearly exactly like 50-50, which I just found pretty interesting. It's a pretty split decision in terms of what individuals are thinking. Like, obviously, I don't know who voted, but it was like 800 something votes. So I feel like there was a decent sample size. Most people who follow me are pretty interested in GameStop, I would say. So we'll see, right? Obviously, we'll see. It's a matter of execution and what they actually do. But I don't know. Like reading this just makes me think like, yeah, I don't know about like buying back shares, right? I don't know about buying back shares. But so you pay money to buy a share and the company doesn't benefit, stock price doesn't go up, and therefore the fundamentals don't improve. Trade Fi Bros want to sacrifice everything on the altar of liquidity. Is liquidity really everything? Make the argument to the extreme. Allow infinite share creation of every stock. Allow infinite money to buy the stocks. Would the prices be representative of anything? Clearly not. So why then is everyone so focused on liquidity? Liquidity. Why are failure to deliver allowed to such a large extent within our markets? Again, by definition, a stock shorted over 100% means there are phantom shares out there. If markets are efficient, why do we need phantom shares? Great point. It kind of goes back to what we talked about up here, right? What was it? Efficient market hypothesis. I see why you put that now. So there are countless examples, but another is Global Links, a Nevada-based real estate company. An investor bought 111% of the float and moved the shares into his brokerage cash account. 50 million shares traded the next 2 days. Crazy.
Small company.
So to quickly show you guys this, if you haven't seen it, I was just looking at this a little bit the other day, and it's pretty crazy. I just kind of like nothing really came of it. Like at the time, like it was like a big thing, and like there's a couple news articles on it, and it was like this is pretty crazy, isn't it? And this was literally like 2006 approximately. So it's just like this is nuts, right? But then just kind of gets swept under the rug. Like, oh no, yeah, well they were like a pink sheet company, like this. The brokers weren't doing it right, this and that, yada yada, and nothing really came of it. But I'll let you guys watch this real quick and see what
In
you
March
think.
2005, the Senate Banking Committee confronted then SEC Chairman William Donaldson with a story about Frank DeBrookie's company, the Nevada-based real estate holding company Global Links. An investor named Robert Simpson had set out to prove that small companies were indeed frequent targets of abusive.
And you see that right there? That's essentially what it looks like when you get the paper from DRS, right? Like with the shares, when if you have shares directly registered with ComputerShare, you get the paper that shows your shares registered. Like kind of looks like that, right? Like roughly, obviously not exactly the same because it's not ComputerShare, but just want to point that out.
Naked short sellers. Simpson placed an order for $5,000 worth of stock in Global Links. That got Simpson ownership of all 1.1 million Global Link shares in the market. Not some of them, all of them.
There were no shares available to be borrowed, and yet in 2 days there were over 50 million shares traded. That's clearly something that needs work.
I was absolutely blown away when I bought 1,282,050 shares, which equated to 111% of the issued and outstanding.
In March 2005, the Senate
Isn't that crazy? It's like it was just like, oh yeah, like that. I'm blown away, and goes to be talked about whatever, and nothing comes of it. Not like, oh, let's check on this, and it just shows you, like, in my opinion, right, my oh so humble opinion, that a lot of this stuff has been going on for such a long time, and I think just the more the internet like evolves, the more there is like a magnifying glass on some of these suspicious things, and like a lot of crazy things in the world are happening, that's for sure. But I feel like, and we're getting to the point, it's hard to even know what's real and what's not, right? Especially with AI videos coming out, like it's hard to even believe what you see anymore in any shape or form. But my point is, the more people on the internet, the more eyes, like the more information, people are starting to see like, hey, this is weird. And not just with stocks, I mean just with things across the board that maybe we're going on a long time and bad actors are getting away with it. And again, I'm talking very general, like maybe not even like just the stock market. You could think about whatever you think that you're like, I never really thought about that, but something that's been happening the past year or so has really made me think like, maybe this is the kind of stuff that's been going on for a long time and I never realized it, but damn, is it actually been going on this long? You know what I mean? So it's like, this is just maybe this was just the tip of the iceberg, right? Where I don't know why, but that just reminded me. I haven't said the expression tip of the iceberg in so long, but I remember in high school, it was like the funniest thing. This guy, he misheard it or misunderstood the expression for some reason. And he was like, yeah, it's like the Tiffany Ice Bridge. And we're all like, bro, what? What the fuck is the Tiffany Ice Bridge? He's like, the Tiffany Ice Bridge. We're like, tip of the iceberg. Like, it was the funniest thing. Like, I guess he just misheard it, or like, and he thought it was like slippery slope, like a certain bridge or something. I don't know, but it's just funny, and that's so funny. I hadn't said that expression in so long, but that's what that always reminds me of. But to get back here, so this is one example of many. If you like, I find dozens of companies this happen to, and the derivative argument is equally wrong. Why would derivatives be allowed to trade if the underlying isn't even circulating? Think some rage baiting. I see it the other way around. Best equipment on the market. Okay, again, I don't want to get in the drama. I'm just going through the main points here. Some people say, look, DRS hasn't moved the price. GME has trended down. That proves our point that the market is fraudulent, that we are removing shares from DTC and buy pressure is still high, yet prices trend down. They changed the short interest calculation. Again, Peruvian Bull's words, not mine. Used to be on the side until you saw the Brazilian puts mounting, sent them to float on Bloomberg, then disappear later. They claimed it was a glitch. Again, so many glitches, right? Just like the data today and the huge buy after hours and the 3.4 million shares that appeared and then suddenly disappeared. Markets exist to provide capital to companies to fuel innovation and economic growth. They're not ends in and of themselves. The entire point of them is utility for other things. Perhaps you need to buy a house, maybe compound your money for college. Hedge funds should not be able to use derivatives to force outcomes on companies. Imagine I went and took out an insurance policy on Trade 5 Bros house, and then I paid an arsonist to burn it down and collect the money. Is that a free and fair market? No. I mean, it's a pretty good analogy. But yeah, when we talk about excessive naked shorting, the counter arguments abound for quote unquote liquidity and quote unquote operational efficiency, quote unquote derivatives, etc. These are not ends in and of themselves. They're supposed to serve a purpose, and that purpose is forgotten. The markets are fundamentally broken. 55 billion of ECP was waived over the course of the sneeze. Does that sound familiar? Why can't I get a margin exclusion when my trade goes the wrong way? Great point, right? And it just kind of shows you 100% waived. Like, it's actually crazy. Yeah, and Instinet was like the ginormous one. And Instinet, as far as I'm aware, pretty much just clears for a lot of like institutions from something I saw a while back. Rules for me, not for thee. Seems to be a very common theme in today's world. Since the damage caused by things like naked shorting and inflation is ephemeral. Damn, gotta improve my vocabulary. I thought my vocabulary was pretty good, but I'm seeing all these. I don't know why all these words today trip me up, guys. But ubiquitous. It is hard for trade bros to grasp it. Well, they only stole 1% of everyone's wealth this year, so I didn't really feel it. This is why you can't keep this up for so long. If they came to your house and robbed you directly, you would think very differently. I do not pretend to know what happens if a stock is 100% DRS. I do not pretend to know when shorts will close. I just know the fundamentals of GameStop look good, much better than that for the stock price, and will continue hodling. I like this last tweet here very much because I agree with this 100%, where I truly don't know what's going to happen. I'm just documenting my journey as a GameStop investor and sharing what I think. And like, I just enjoy doing YouTube and talking about what's going on, right? Like, people are talking about it, people are interested in it, and so am I. So I started talking about it, right? Like, that's how my path has kind of gone. But yeah, I don't know. Like, nobody truly knows what's going to happen. And I always reference this and I always think back to it. It's Matthew McConaughey in Wolf of Wall Street. It's fugazi, it's fugazi, it's a wazi, it's a woozy. That's really what the markets are. And what happens in the end in terms of how things play out, I couldn't tell you, right? Like, I genuinely couldn't tell you. And I really like to keep moving towards the theme of like just sharing information with you guys and let you as a viewer like look at it and see what you think and be open to being countered, right? And that's why I don't want to go too deep into certain things. I mean, that's not the right way to put it. Not that I don't want to go too deep into certain things, but I like to just bring things up and talk about it. And like, I'm going to touch on it, like, oh yeah, this, or like, oh yeah, well, maybe that. And just like, not that I can't come up with like some in-depth analysis, but I'd rather like my viewers like look at the knowledge and the information and take what they want out of it. It's not just like, oh, well, I started thinking that because Tetron was saying that. Like, they go, oh yeah, I was watching on Tetron and he was saying it was this or that, but I thought it was more so that because I was originally thinking this, but then when he brought up that point, I maybe remember that, saying this and that a million times, but you guys get what I'm saying, I hope. So definitely an interesting thread here. Again, nothing against Conway Yen. Again, I don't know him personally like that or anything, but I like Peruvian. So, and I like this thread and the points you brought up in terms of just markets and market structure. And, definitely I agree with Peruvian Bull in terms of GameStop and Bitcoin. I believe in Bitcoin. I do, but I also understand, you know, there's risk with that. And the thing that susses me out the most is the stuff going on with Coinbase, where they're just like kind of bottlenecking, so to speak, of the money flowing into Bitcoin because such a large majority of like the ETFs and institutional ownership is through Coinbase, just one party, and that kind of like defeats the purpose of being decentralized. So I hope that's not continuing to be the case, because then if more and more Bitcoin is actually held through Coinbase, especially not by individuals, like I find that increasingly concerning. So something to keep an eye on. But I do like Bitcoin, and I wouldn't be totally opposed to GameStop adding Bitcoin on their balance sheet. But I think if they do that, it needs to be a very limited amount, like maybe at most 50 million. That's like under 5% of their cash reserves. And I think it's a store of value and it would make sense. But I also understand where that's just going to bring on a whole new wave of criticism, not necessarily from individual investors, but from, the media, no matter what they do, right? The media is like, oh, GameStop is doing this. It's so bad. There's like that one guy that makes those videos like, GameStop is so bad. And that's like his whole channel, or I don't even know his name. I don't even want to try and figure it out and give him any kind of more views. But I swear, all he does is make videos that are so negative about GameStop because he worked there like 5 years ago. It's like, bro, talk about something else. Like, come on now, get over it. But yeah, I definitely want to go through this article next. And let me hit the chat real quick and take a water break. Let's see. Hit the like button, everyone. Yeah, Scott, good point. Thank you very much. Appreciate you dropping that in there. Rumble and DWAC about to squeeze like GME, a father's man child. I don't know. I don't know about that. I don't really follow those two. But gotta wonder how much RC considers when showing headphones when it comes to business decisions. I do wonder too, Ryan, but I like to think that he just sticks to the plan that he has and just sticks to improving the business and letting results speak for themselves. I think that's what he does at its core. I was on Twitter Space call with Conway. He's not a bad dude, just one track mind on options trading. He's so focused on the stacking of puts and calls relative to the price, hard to see other stuff. Conway is well intentioned but needs to expand his horizons to other ideas that make GameStop price/trade unique and how the investment community is unlike any other. Got one more GME today because I can. Thanks for being here, and that's why you can get more GME because you can, right? But yeah, Scott, that's a great point, right? And like I love comments like that where you're like, listen, I disagree with this guy. Like I don't think like, oh yeah, screw him, like he's so bad, right? But it's like, okay, well, like I see where he's coming from and like I agree with some of the stuff he says, but this is why I think he's disagreeing with this. So good comment, man. I appreciate that. Perspective of why GME price is down is because of options trading is pretty decent in my opinion, but he seems to be playing the quote unquote by the rules, which is not quote real when it comes to white true finance. Good point. What's up, Tetron? Got my tax return, 200 shares of GME locked in. Expensive bad. Thanks for being here. Great to see you. Hope you're doing well. But yeah, dude, that's great. It's so good getting your tax return and like if you can get a return, right? Obviously it's not that black and white, but gotta do what you can to write some stuff off sometimes, right? To get a return. That's always nice. So I got a little return, bought a tiny bit of GameStop with it, but also just saving it, trying to build myself up in some other ways here. But yeah, no, I think, if you get money returned for your taxes, investing is a great idea. And, whether it's GameStop or whatever you believe in, I think just investing something that you believe in, take the time to research is the way to go because just holding in cash is not going to do well for you in the long run, especially with just the money supply ever increasing and the money printer going burr. Keep up the great work. Love your content. Taco Bandit, thank you very much, man. Thank you. I'm really trying to improve. And I don't know if you were here before when I said this, but I feel like I've been doing too much thinking. Like how I want to take Tetron. What do I want to do with my life? And when I think of what I want to do with my life, I always think of I don't know if you've ever seen the Twisted Sister music video for I Want to Rock. It's like, what do you want to do with your life? It's like, I want to rock. Bah! It's like the teacher goes through the ceiling or something. I don't know. It's just funny. But it's like the teacher in the beginning of the music video is like, what do you want to do with your life? And like, I don't know. It always lives rent free in my head for some reason. But I think I have to just not think so hard. Just go, right? And just keep going. Like, why? Like, I'm overthinking. Like, I feel like I'm my own worst enemy. And I'm sure a lot of you guys out there feel like that sometimes, but it's all about driving forwards. Look at BBYQ. They bought back shares and used all their cash when bankrupt. Mr. Dauschmark, thank you very much for being here. Buying back their own shares won't make them earn any more money. Great point. I think you might have actually said that on last stream. If you didn't, someone else did, but thank you for saying it again. Because, yeah, it's important for people to see that perspective. I think with Bed Bath's a little bit different because their balance sheet was so bad already. So if GameStop bought back a little bit of shares, it wouldn't just totally cripple their balance sheet, like if they only just allocated like 100 million towards it. But at the same time, it doesn't make them any more money. You're absolutely right. And the more I think about it, it's like the revenue is not going to be able to ever rate. Like, revenue is never going to be more from repurchasing shares. So, yeah, I don't know. I love that you guys say this because every time I think I'm like leaning one way more than the other, I'm like, no, maybe not, right? Or like, I would say I think right now they have to just keep building up the balance sheet and not make any sudden moves and find ways to get back on track to start raising revenue. Like, I think that's kind of what I would want management to focus on, right? Like, obviously I don't make that decision, but Conway's still working for the whale guy. Better for GME to save that cash board. Hoard and let the shorts drain their money. A dividend would be sweet, though. Exactly, Coffee, Donuts, and Homer. Exactly. Only thing GameStop can do is be profitable, make more money, and expand the business. Exactly. Little by little. That's all you got to do. Camelot, dear SGME, thanks for being here. And yeah, that's the clown I was talking about. He's like, I don't want to start roasting him too much. I mind my own business, but I think he's a clown. GameStop can act as a holding company, invest that $1 billion in Apple stock after the crash. Ryan Cohn will be Buffett 2.0. It could happen. It could certainly happen, right? I think it'd be probably maybe one of the dopest outcomes of GameStop as a whole in the long term, where in the end, Ryan Cohen turned it into essentially a powerhouse investment vehicle that's also like a video game company, but but it's so much more because he's investing in other things, right? That'd be pretty nuts if GameStop had like some Apple shares as part of their holdings, because Apple's always gonna keep going up. I mean, I'm not saying that, right? Like, let me take that back. I'm saying Apple isn't going anywhere, right? Like, they have such market dominance. It's hard to imagine that in 10 years from now, although a lot can change over 10 years, that Apple wouldn't be worth more. And like, why you're saying the example of Apple and I'm saying Apple is because Ryan Cohen already owns a lot of Apple stock for a long time. But whether it's Apple or another company, it's a good point where it's like, okay, well, maybe we're not going to be able to grow revenue, but I'm going to put good assets on this balance sheet to grow the value of the company over time because we own part of it. And just the same way they could theoretically buy shares of GameStop, but obviously Apple's not going to do that. But all right, let's finally get into this. I have completely gone all over the place today, but I appreciate you guys so much. I apologize if it's like hard to follow along, but like, that's how my brain works. Just like, see one thing, see that, like, oh, boom, 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 right? And maybe it has to do with my attention span being bad, like I was saying before, because we live in a very, very fast world, very, very fast, and I'm really just starting to become so conscious of like, damn, gotta slow down sometimes, right? Namaste. Having said that, GameStop's quest for modern operations, how unified tech and AI transformed their frontline experience. Founded in 1984 in Dallas, Texas, GameStop has grown from its smaller retailer roots to include a diverse range of consumer electronics, game merchandise, and digital products. GameStop has a significant global presence in gaming retail with more than 3,000 locations in the US and beyond. Amidst a rapidly evolving retail landscape, GameStop has been steering toward digital transformation. This includes revamping its e commerce platform, exploring new market niches, and integrating advanced technologies. One such strategic move is adopting Yobic solutions to enhance store performance and customer engagement, marking a significant step in the company's ongoing evolution. We sat down with Matthew Goodfriend, the senior manager of learning and development at GameStop, at the National Retail Federation conference to discuss how GameStop continues to navigate the challenges and opportunities of the retail sector. Here are some of the top takeaways from the fascinating discussion and how GameStop created an employee-centric approach to drive an immense digital and operational transformation. Oh, look at that. You could watch the recording. Keep that in mind. Maybe I'll have to do like a reaction to that on the next stream or something like that, or maybe in a video. But 1 second, let's get more water. Got to remember to hydrate. So GameStop's partnership with Yobik significantly enhances the synergy between its corporate support center and store operations. This initiative, launched in March 2023, so about a year ago, was not just about upgrading technology, but transforming the way GameStop connects its diverse ecosystem, including 3,000 stores and distribution centers. It was a comprehensive project that impacted the connected enterprise, including headquarters, distribution centers, and stores. This holistic approach aimed to streamline operations and improve communication across all levels of the organization. So, just sounds to me like doing the small things right in terms of the technology and the data and keep track of everything. The motivation behind GameStop's move to Yobik, as shared by Matt Goodfriend, or Goodfriend, I bet Matt is a good friend, right? Stemmed from the challenges posed by a disconnected tech stack. So I think that goes back to Ryan Cohen first getting involved and saying how underdeveloped they were in terms of the technology. The company previously relied on various point solutions that lacked cohesion and did not offer streamlined functionality. Good friend pointed out, it's got to be good friend, right? That's got to be how you say it, but I'm going to say good friend regardless. Good friend pointed out the critical issue of being unable to harness real-time analytics effectively, which limited their ability to make data-driven decisions. The fragmented nature of their previous systems made it difficult to track and improve key performance indicators, KPIs, and overall store performance efficiently. And that goes back to something I've touched on in the past at like various points where you need that technology in place to make those decisions, right? Like to figure out how are stores performing overall, what kind of products are selling more on the East Coast versus the West Coast of the United States. Why does this region sell more collectibles? How fast are we selling this type of item in this store? Maybe we're selling it very quickly, so we need to make sure we have more in stock. This type of item isn't moving as much in this particular region. Maybe we need to just sell this item online, or we need to restock it less so in terms of when we're ordering inventory. But the shift to Yobik's unified platform addressed these fundamental challenges. Goodfriend emphasized the importance of improving the employee's experience as a core objective of the integration. He described the previous setup as clunky, with limited visibility for district and regional management, making it challenging to understand task completion details, timeframes, or any encountered obstacles. Yobik's solution offered a more integrated and user-friendly platform for tasking, communication, and learning, all in one place. This consolidation facilitated a more transparent and efficient workflow, providing better support and feedback mechanisms for employees at all levels. Centralizing operations on Yobik's platform allowed GameStop to bridge the gap between their corporate support center and individual stores, ensuring a more cohesive and responsible operational framework. This approach streamlined task management and communication and enhanced the ability to track and act upon real-time data and analytics. The project's success, bringing 23 users on board the platform, underscores the vast scale of GameStop's ambition to drive connectivity and efficiency across its entire operation. So to go back to this part here where it talks on limited visibility for district and regional management, making it challenging to understand task completion details. I can tell you from my time working at Marshall's, I worked my way up. I was an employee. I started there when I was 16, wound up quitting by the time I was 21, but got a lot of life experience out of that because I saw what it was like to truly work hard. Like anybody that has worked retail can tell you it's hard work. And like day to day, like it's a mental grind, like dealing with the customers, dealing with when you're managing people, like the employees. And when you're good to your employees and your employees are good to you, it makes it a lot better. And that's what I think allowed me to have the opportunity to take on a management role, especially at such a young age. So I was at Marshall's from the age of 16 to 21. I was like, they called it like front end supervisor. It's like, you know, when you're at like a Marshall store and like there's everyone on the registers, but there's someone back there usually like telling people when to go to break, like coming over when a customer wants like a discount, right, on a product. Oh, this thing is a scratch on it. Like, can I mark it down? Yeah, sure, I'll mark it down 10%, right? Like that's kind of what I started doing. And then also it'd be my job to, okay, like the line is getting pretty long. We only have 4 cashiers. Like I better call someone up that's on the sales floor right now or in the back room. And that would create a lot of controversies because then the other department managers were like, "Oh, well, they need to be getting out the product. We're falling behind on getting out the product." I'm like, "But I'm supposed to be managing the line, and we don't have enough employees. So what do you want me to do?" But that's also why it's extremely stressful because it's like everybody's like they like design it. I swear they design it at Marshalls where it's like the managers kind of like fight each other to get everything done. Not fight each other, but fight over like how many hours you get allocated to your department, right? Because you want to look good to the district and regional managers. And where I'm going with all this is we would always like I would move up right from front end supervisor to then be like men's and shoes like department manager and basically like had a key to the store and everything, which was pretty mind-boggling at like getting a key to the store at like 19 or 20 years old. I'm like, that's crazy. Like I have a master key to this whole place right now. Like, let me rob them. No, I'm just kidding. I'm just kidding. Obviously, I wouldn't do that. But my point is, like, I got to see the numbers and like they would be okay. Like, we need to improve like the total sales in the men's department. Like, what are you doing to go about that? Like, and it would stem from the top down. And Marshalls is obviously much different than GameStop. But my point is, they had all the analytics and the numbers to like keep track of these things and put these like expectations in place. Like, it wasn't just pulled out of thin air. So to have these things being sent down from the top all the way down to the individual employee, you need a good system to keep track of everything, to actually, have responsible operational framework as it's put here, right? And just having everything be more cohesive and just being able to see the right information, analyze the information, and then put a plan into place. And I think that's like partly why I'm interested in Palantir and like what they're doing as a company, where it's like using a lot of data and pulling a lot of data, but then looking at the data and making informed decisions based upon it, or going, okay, well, what if we actually sorted the data like this, or we were a little bit more specific in this particular area? And then when you do that, you can make a better decision, and then trial and error and etc. But the point is, it seems like such a simple thing that they implemented SAP and like Yobik, as we're seeing here, as technology in place, but it makes such a difference for like running the business from the very top and trying to make it operate more efficiently. Because obviously Ryan Cohen can't be looking at every single GameStop store, right? And being like, oh yeah, like I'm gonna go visit every single one. Like obviously he doesn't have time. Excuse me, he doesn't have time for that. So you need those good analytics in place, and then you want to have good management because you want to be able to trust your district and regional managers to be making the right decisions. And then it goes from individual employee, probably to some kind of supervisor, manager. Then you have district manager. Then you have regional manager. Then you maybe have like coastal manager of like the whole East Coast or something like that. And then you have like head of stores, right? Something like that. So for the information to efficiently like move up and move down in terms of moving up, like what's happening, and then moving down in terms of like a plan in place to move forwards, you need good analytics. Like that's just the bottom line. And in today's world, like more so than ever, because with the way technology's evolves, like you can keep track of like every single little thing if you have the right things in place. And prior to GameStop's having Ryan Cohen and the new management team involved, like they simply didn't have that. And as it's put, like previous setup was clunky, limited visibility for district and regional management. Old management for GameStop, like pre 2020, completely neglected like technological upgrades in any shape or form. And to me, it's very evident, and that's why people say, "Oh, GameStop's falling behind." And then the question of like, was it on purpose? Is for you to decide as an individual if maybe there were some bad actors in there, such as BCG, that maybe had some ill intentions, but personal thoughts and opinions only. Fostering a fostering a collaborative culture. GameStop's integration with Yobik has a streamlined operations and created a dynamic platform for secure and efficient communication. Good friend discussing the transformative impact in Yobik on GameStop's communications practices emphasized the critical need for timely responses and the importance of building strong connections between the store support center and the stores themselves. Okay, so like for like customer service, when you call in to the customer service line, they'll be able to see like, okay, like what transaction happened at the store, maybe not that specific, but they can get access to the data information in real time. Recognizing store associates as their frontline ambassadors to the GameStop brand, Goodfriend emphasized the introduction of Yobik revolutionized how information and knowledge are shared across the company. Kind of was just going into there, but let's zoom in on this. This is interesting. Get really zoomed in. GameStop main menu, communication. You have 2 posts to read. News and communities, chat, district, SL, ASL chat. Question, are we allowed to use trading credit on gift cards? I had someone ask it and I wasn't sure if that was allowed. Trade credit cards still work. It's just standard GameStop gift cards that no longer work for point of sales. So it's basically like an internal system for them, right? Just based on this image where they can become more knowledgeable to the customers like coming in the stores, right? Or to people calling in to like the customer service line. Like if you go on the GameStop app, it's like have a question, call us. Like there's a phone number. If you call that number, there's no like press 1 or like this is how every phone menu in all of history goes. Because for what I do for my job, like I call other places all the time, and it's like, please listen closely because our menu options have recently changed. And it's like a recording from like 5 years ago. Obviously, the menu options didn't recently change, and then you gotta press 1 if you're an existing client. Press 2 if you're a new client. Right? Like it's a whole phone menu, and like so many places are like that. But GameStop, you call them, hey, it's Noah from GameStop. How can I help you today? And then you could go right from there. Like maybe in some scenario, right, they might have to pass you along if whatever the case is and how they work internally. But getting someone on the phone right away, I feel like it's such a relieving thing in today's world. And I feel like some of the best companies besides GameStop that do that have the best customer service, right? Where when you call, like you're gonna be able to get someone on the phone, and like even if for some reason, whatever reason, isn't answered right away, like I feel better at least talking to someone. Okay, I'm gonna get back to you. And just get their name, employee number, whatever. If for some reason they forget, but when you get like a menu and it's like, oh, like please leave a voicemail, and someone will give you a call back. I'm like, really? Like I went through this whole phone menu just to leave a voicemail to hope I get a call back, right? I mean, that's for what I'm doing. Like it's custodian to custodian, like company to company. So it's a little bit different. But my point is, it's nice to be able to get someone on the phone right away. And I think I appreciate that. And I think customers will appreciate that in the long run, especially people who are maybe like, I don't know about GameStop. Like I've heard bad things, or this bad thing happened to me in like 2019. I'm never going to shop there again. But they have a good deal. I'll buy it. Some kind of discrepancy happens. They call. They're, oh, I got someone on the phone right away, and they were able to solve the problem. They gave me this or that. They explained why. Like, wow, all right. Like, I actually will shop at GameStop again. Like, and that sounds like a very extreme example and very small, but like, that's how you evolve and like fix your image and improve. And I really think doing all the small things right. And again, kind of that should have been the name of this stream. Uh, doing the slow and boring things right goes a long way. Or I should have put that in the name somehow because that's kind of in the theme. I keep going back to that, whether it's been GameStop or in general or speaking to myself individually. But doing all the small things right, slowly but surely, and just taking these steps to improve, I really think is why they're getting set up to be in a spot where they're going to be consistently profitable going forwards. Again, that's my opinion. Proof will have to be in the pudding. So we'll see what the pudding looks like, right? But the strategic use of Yobik provided a professional platform for communication, avoiding the pitfalls of internal or unprofessional channels. It forged a sense of community among employees, improved the efficiency of store operations, and enhanced the overall quality of communication within the company. Through these initiatives, GameStop improved operational efficiency and also strengthened the connections within its workforce, laying a foundation for more cohesive and responsive retail operations. Efficient training with AI. GameStop's decision to volunteer to test Yobik's AI-powered NeoSuite beta program has been pivotal in creating a more efficient and effective training environment, fundamentally transforming how knowledge is shared and training is conducted. This shift is particularly evident in how Yobik streamlines its communication and learning processes, making the company more agile and responsive to the needs of its workforce. So let's zoom in even more here. This is like tiny pictures. So GameStop's main menu: learning, Q4 playbook, business operations, customer experience. Profits are number one priority. Team support. And I like that. Profits are number one priority. I definitely like to see that. Leaderboard, district / WHS. So you know, a little bit internal competition. I don't know how I feel about that, because like you don't like I feel like internal competition's good because you want everyone to be driving forwards. But at the same time, and wow, this must be annoying you guys. This whole time this has been here. You didn't just click accept to make it look more so on the screen. But yeah, but at the same time, like you need a little bit to like kind of drive everybody forwards. So there's courses, quest log, let's see, Atari, GameStop, Game Station, Pro Plus, Dream Gear. What is this? I guess so you just become informed on it. Interesting. Leaderboard, courses, quest log, 9 upcoming, 1 overdue, 10 activities today. So it's basically like an internal platform for all their employees. So I think that's pretty cool. It's probably like how they do all their trainings and everything too. And whereas previously they probably had all their trainings in just one platform and then another platform to keep track of this, another platform to keep track of that. But now they're trying to streamline and just put everything under one roof, and probably cost less to just use one company such as Ubik, right? So before Ubik, GameStop's approach to employee training was outdated and cumbersome, heavily relying on static PDF documents and basic quizzes. I can tell you, Marshalls, when I worked there, that was the same. I worked at Nike for a very, very short while, literally 3 days, because I could just tell it was going to be terrible. And they were like, oh, yeah, you have to work on Thanksgiving. And I was like, I didn't know that when I started. And like, when I also put in for days I can work, Thursday is like the one day I can't work. So I just assumed, like, it's Thanksgiving. Of course you have to work. And I was like, all right, this is not going to work out. I don't need this part-time job that badly. I'll just focus on school and find something else. But get back here. This traditional method lacked the interactive and engaging features essential for effective learning, leading to challenges in management and low knowledge retention among teams. I can tell you definitely from training Marshall's employees, it's so true. Like they learned from actually doing, because the training material is just so poor. Their orientation, like, basically taught them nothing, and we teach them everything from the ground up. So it goes a long way to have better training. Yobik's capabilities to ingest SCORM content, SCORM, allowing for integrating externally authored training materials, represented a significant upside. So let's read that again. Allowing for integrating externally authored training materials. So basically, if it's authorized to be material that's not in GameStop, it could be added in within training, which I think is pretty cool. Real world context, along with the platform's ability to facilitate rapid content creation and analysis, has been crucial. Again, that's the AI side of it. Good friend emphasized the importance of agility and efficiency, stating, being able to create quickly, get results quickly, and then look at the analytics quickly around that content has been absolutely important. And I couldn't agree more, because going back to another point I made before, where we move very quick in this world, right? Like it's a very, very fast world. Everything's a swipe, everything's quick, click a button, it's done, right? Refresh the page, everything's right there. So in a very fast world, like what you're operating on needs to operate fast, right? And be efficient in that way. And that's where I think AI plays into it for them. The introduction of the Neo Suite illustrated GameStop's innovative approach toward training and development. Neo creator converts traditional documents into interactive training modules, including news, tasks, or quizzes, enriching them with AI-generated or existing illustrations. This automation significantly reduces the time and effort required to create engaging training content, saving up to 75% of time in content creation, plus the use of video content and Neo Assistant chatbot for instant access to information like uniform policies or product returns, showcases a leap toward modernizing and enhancing the learning experience at GameStop. So that's pretty cool. But they're literally able to use like old documents to, like, using AI to turning into training materials. And like I was talking about in the very beginning, how I generate AI images for fun. Whether it's for my Twitter or for like my thumbnail today, like just have a good time with it. But I never thought about it that it's like training materials could have, where did I just see it? Converts, enriching them with AI generated or existing illustrations. So based on the information, they can AI generate images to go with the training. Like, I never even thought about companies being able to do that. And it's just AI images aren't all just for fun and games, right? There's actually going to be like use cases such as this. But again, I think AI, very scary, very awesome, but more scary. So new creator, creation of courses and quizzes in less than 30 minutes versus days, 95% accuracy. So let's see. Steam Deck. Steam Deck provides the most gaming power per watt per dollar for this kind of device. Over 11,000 games on Steam Deck. All-in-one portable PC gaming. Title: Introduction to Steam Deck. Excuse me. Steam Deck is an all-in-one portable PC gaming device that lets you play your Steam library on the go. So it's like a summarized version here. Like this is like multiple points, but it's just like a quick summary. So yeah, this is way longer than I thought. All right, yeah, let's keep going here. I'm going to be on this forever. Improving the HQ perspective. Right? Is that where we were? No. Okay. GameStop's decision to participate in the Yobik Neo Beta was driven by a desire to keep the company at the forefront of technological innovation and aim to provide the best possible experience for employees. The results speak volumes, and the efficiencies gained in content creation for learning being a standout achievement. The ability to transform a document into a comprehensive course, which would traditionally take up to 20 hours of development, to a task significantly reduced in time underscores the effectiveness of Yobik's solutions. This process, as good friend, spelled wrong there, noted it involved the AI doing the quote-unquote heavy lifting, leaving only minor adjustments and refinements to be made by the team, so like whoever's reviewing it. This was especially crucial as GameStop faces unique regulatory challenges, particularly in states like California, where stringent secondhand laws exist. These laws regulate the buying and selling model of used products, a core component of GameStop's business model. Compliance with such laws requires the company to adhere to specific procedural and documentation standards when purchasing used merchandise from customers. Given the complexity and variability of these laws, which differ significantly from one jurisdiction to another, maintaining compliance while ensuring efficient operations presents a significant challenge. The need for agility in training and updating employees on these regulations is paramount. GameStop's adoption of Yobik's platform, particularly in its advanced training models, is a strategic response to these challenges and enables the company to swiftly adjust to regulatory changes and maintain compliance across its operations. Makes sense, because yeah, there are states like California that have particular rules, and you want to make sure that your stores in those regions are following those rules, because then you can get hit with some BS, got to pay some bogus fine, right? And you obviously don't want that. We're trying to maintain a strong balance sheet. But let's hit the chat real quick. Damn, this is, yeah, again, guys, this is way longer than I thought. Maybe I should go through the rest of this next time, but well, we're almost at the end. We're almost at the end here. We got to keep going at this point. But the only thing GameStop can do is profitable, or GameStop can act as a holding company, invest that $1 billion. Or everyone's just waving. Wendy, Freshmaker, hope you're doing well. Damn, what a long stream, but a good stream. Like this is just so much longer than I thought. Maybe it's because I'm zoomed in now, but where were we? Okay, proving the HQ perspective, right? Because yeah, there's just 3 sections left. All right, more water, more water. Gotta stay hydrated. But Yobik significantly enhanced how GameStop approached task management and analytics, particularly from its corporate headquarters HQ perspective. Matt Goodfriend illuminated the transformative impact Yobik has had in operational tasks such as store visits, audits, and loss prevention efforts. Previously relying on manual processes, GameStop shifted to Yobik's. It better be Yobik after all this time, right? Or is it Ubik? But some platform streamlined these tasks, incorporating unique logic beyond simple binary outcomes. This new system allows for a nuanced understanding of store operations, emphasizing not just completion but the quality and impact of tasks. From the HQ vantage point, the transition of Yobik's comprehensive analytics has been a game changer. The platform's capabilities extend beyond the binary completion status of tasks, enabling HQ to delve into detailed analytics about how, when, and in what matter functions are completed. I think that's huge right there. Being able, and that's also like the human and AI connection, where you have to have the AI in place and the data in place to get the information, but then you have to actually have the right intelligent people in place to make the decision to go, hey, this is what we should do here because of this. You know, it's about how this happened. It's about when this happens. It's about the manner in which the functions are completed, right? Those are all definitely factors. Including features such as photo submissions and real-time annotations now help facilitate immediate corrections and improvements within stores, bridging the communication gap between frontline users and corporate center. Again, I love that because I think in a world we live in now, everything's very fast, right? So they got to be fast with everything they do in terms of improvements and just day to day. So I love that right there, that it's just another aspect of connecting everybody who's working with the company together. That's really what I'm getting out of this whole thing, is that it's a lot of like piecing everything together, whether it's employees working in the corporate office versus a regional manager versus an individual store manager, right? And then also beyond that, like maybe someone who's just managing like the online inventory gets perspective of what the people in store are saying. And again, this is all just general stuff, and it's not like, oh, this is going to make them like a gazillion dollars, but it's about like slow and boring and just moving in the right direction. And I think that's really why they're going to be able to be profitable, because they're focusing on doing all the small things right and then finding a way to scale. That's how I see it, at least. But this is, let's see, manage function, improvements. This advanced level of operation insight underscores GameStop's commitment to leveraging technology to enhance efficiency and responsiveness across its network. The mere scale of this initiative, with the rapid deployment of Yobik to 22,000 users within just 4 months, see, that's pretty quick to go to all those users. I mean, I guess in this day and age, like I was saying, everything's fast, so I guess it's pretty normal, but is a testament to GameStop's dedication to innovation and agility. So that doesn't just happen with Yobik saying, here, everybody have it. GameStop has to want everyone to have this. So to me, it's evident they wanted this in place ASAP so they can make better decisions as soon as possible. And this, according to the beginning of the article, was only put in place like 1 year ago. So if it was put in place in about March of 2023, really this is just the first year it's in play. And the more data that's collected, the more decisions can be made, right? So as this platform is used for a longer period of time, AI gets smarter with more information, right? And that means more data-driven decisions can be made. Like, of course, it still comes down to individuals making the right decisions, and that's why you have to believe in who's running the company. But they have more tools like available. That's how I see it. Streamlining complex business practices with a 6,000-page standard operating procedure (SOP). GameStop's operational complexity requires a sophisticated solution for quick and accurate information retrieval. The introduction of Neo Assistant, Yobik's new chatbot feature, marked a significant advancement in how GameStop manages this complexity. Goodfriend shared insights into the effectiveness of this tool, and noting an impressive 98% accuracy rate in providing answers to queries. This accuracy facilitates immediate problem solving and enables GameStop to identify and fill gaps in its documentation, which continues to improve its operational procedures. Neo Assistant reduced the support team workload by offering immediate, accurate answers to common operational, technical, and customer service queries. The tool is crucial in enhancing efficiency by directing users to the right resources or contacts for further assistance. Goodfriend projected a 70% reduction in calls to the help desk, underscoring the significant impact of Yobik solutions on reducing operational friction and improving support infrastructure. All right, so a couple points on this one. Damn, you know what I should have been doing this whole time? I should have been taking notes on this. That would have been a good thing to do. Let me write that down, because that's something I want to summarize this in some shape or form. Summarize. Write myself a quick note. Yobik. I gotta get the pronunciation right. Imagine it's like Ubik this whole time. I'm saying Yobik, but you guys got the point. But what this basically is, right? Well, first point, seeing here, projected 70% reduction in calls to the help desk. That makes me think that is why they ultimately determined that they were going to close down the customer service center that was opened, and it was only open for a couple of years, and they ultimately decided to wind it down. So if they chose to wind that down, I would think this paragraph right here might have something to do with that, more automating and less people working on the team and just having quicker access to answers, and maybe don't need that whole other building. Like, you just have them do it out of a different corporate office, such as like just their main office in Texas, right? Like the headquarters. So that's one point there. Then the other point I wanted to make is, like, you're probably seeing it already on the screen here, and like 98% accuracy rate of providing answers to queries. The accuracy facilitates immediate problem solving and enables GameStop to identify and fills gaps in its documentation, which continues to improve its operational procedures. And what you see right here is basically an internal ChatGPT or AI corresponding thing for employees to use. Any employee, or maybe not any employee, but basically it's ChatGPT specifically for GameStop employees. So like, what is our return policy? Like, what is the GameStop return policy? And then it would spit out like, GameStop return policy is this, and this, and then during holidays it's extended or whatever it is. What happens if the product is used? Does that impact? Like, you can ask it follow-up questions. So it's essentially like a Chat GPT or Google Gemini or Microsoft Copilot, whatever you want to think of it as, but for specifically GameStop employees to use to provide the best information. And I think that's huge, and I would imagine other companies are starting to implement this. I'm not saying that GameStop is like changing the game doing this. Like, there's nobody else out there doing that. I'm sure there is, but I didn't realize it was happening until I read this right now, and I think that's excellent for all the things this article's talked about, training and just improving and quicker access to information. This is so essential. Like, it's awesome, actually. Like, I think this is my favorite part of this whole article, that they have this chatbot where they'll be able to communicate, not like individuals are communicating with the chatbot, but employees can get information they need. Oh, let me go check on that. And they could low-key just go in the back and like type it in on this. Like, oh, what was the return policy again? I forgot. You know what I'm saying? Something like that for or some off scenario. But I think that's pretty dope. And this would also get smarter the more information and analytics that are within it. And that also goes back to everything being essentially vertically integrated with the data, like all the data and information, the training, everything is essentially being vertically integrated through Yobik. So I think it's very exciting, and just another one of the many steps they're taking to be consistently profitable. So leveraging AI to work for employees, GameStop's strategic partner with Yobik represents a transformative leap in retail operational efficiency and connectivity. GameStop not only streamlines complex business operations with Yobik's comprehensive suite of solutions, but also enhanced communication and operational oversight. Implementing Yobik's platform across GameStop's vast network underscored the potential for digital tools to revolutionize retail management. For retailers looking to navigate the complexities of modern retail operations and improve organizational connection, Yobik's Neo Suite can help. Our solutions present a compelling opportunity for retailers aiming to enhance their operational agility, employee productivity, and overall store performance. All things that lead to better profitability, or more higher net profits, I should say. If you want to take retail operations to the next level, check out Yobik's AI tools for frontline workers or contact us today for a demo. So obviously they wrote this article with the purpose of wanting to get more people to use their platform. But as a GameStop investor, I read this as somebody that wants to know exactly like what's being implemented, and I think this is excellent. And shout out to what was it, SHF ATM on Twitter, who posted this. Otherwise, I would have never came across it. So I'm trying to go on Twitter less because I feel like Twitter just gives you like the I don't know about you guys. I got the craziest stuff on my feed. Like, I don't want to see, like, not even when I try and mute stuff or like not, you can do like the three dots, like not interested. I still get the most disturbing like stuff or like stuff. I'm like, I don't want to know about all the craziness going on in the world. Like, I want to read about stocks, finance, and entertaining things. Like, I don't want all the negative. Like, there's so much negative, but at the same time, if you want to read the news and know what's going on, like there's negative stuff, right? But it's like I wish I like I go back and forth. Like, I want to use Twitter more to like integrate, like interact with you guys who watch my stream, who watch my channel, who are talking on there and sharing good ideas. But it's like I have to sift through a lot of just nonsense because that's just how the platform is, right? And like I just feel like it takes a toll on me sometimes, and I really don't use like any other platform. Like maybe once in a while I'll get caught up in YouTube Shorts, but I'm like, damn it, no, I can't be swiping. Like I don't use TikTok, I don't use Instagram, like I don't just go like I don't use Snapchat, like I don't really use any of that, right? So I just use Twitter. Like, I don't use a personal Twitter or X anyway. Like I just use Tetron. So yeah, that's really it. Where it's like I'm trying to just cut out all the negative and just focus, but it's like I want to use it because it's like there's so much good and so much bad, if that makes sense. Where it's like it's so good for what I'm trying to do, but it's so bad for like just having to like see all this nonsense constantly when I'm trying to just focus on Tetron, GameStop, Bitcoin, and improving myself. You know what I mean? Like just speaking very generally here, but that's where I go back and forth on it. I think I want to, so like if I'm not replying to stuff or not seeing stuff, sometimes just understand, like sometimes I just have to not look at anything for what's best for me and just taking breaks. And it's not easy because it's so easy to just pick up my phone. What's going on? But like that's what I was saying. Like I try to put my phone in the other room. Sometimes I'll even delete Twitter or X for like a weekend or a couple days. So that's why you'll see me like not really interact with anything, or I'll just reply to you for something you said like 3 days ago. And it's not that like I'm just like trying to ignore you, but it's like I'm just trying to like do what's best for me, but like also keep improving, if you know what I mean. But yeah, I think I'm just about ready to wrap it up. I did want to touch on the DRS numbers a little bit more, but I think I'm going to do that more next stream. But the reality of it is, you know, nobody truly knows why the DRS numbers are the way they are, right? There's the heat lamp theory, which I've touched on a little bit in the past, but and the wording is different, right? We never, when I say we, I mean individuals. Like, there's never been like a definitive answer of why the wording changed. Like, we have this many shares registered with our transfer agent. Now it says like a specific amount of shares held by Seed & Co. on behalf of the Depository Trust and Clearing Corporation, and then we're held by record holders. So the language changed randomly, and that was just odd to me. But it's also like strange where it seems like a lot of individuals are continuing to directly register shares, and anybody that would register shares, right, would probably not intend to sell them. And if there's people who are buying consistently, just cost averaging, like consistently buying, you know, not necessarily massively buying, but just constantly buying, it just seems odd that the numbers like pretty much stagnant for like 1 year. Like, I'm not saying it's impossible, but it just seems odd, right? Like, am I crazy to think that? It just seems so weird. And a reason, maybe, right? I mean, again, I couldn't tell you, but it's just odd. It's just odd. And I like having my shares directly registered because I know it's truly my name. And I understand, you know, not everyone wants to go that route. They're like, oh, computer share looks like it's a platform from like 2010 because it's very simple. But, you know, most individuals aren't holding shares on there. It's mostly when a company goes public, shares go to, like, anyone who held stock privately then gets the shares publicly in the transfer agent portal, and then they would transfer it to a brokerage. In this case, you know, it's withdrawing from the DTC, directly registering the shares. And I can tell you, like, the DTC oversights the National Securities Clearing Corporation, and the National Securities Clearing Corporation is runs the ACAT system, which is like the automated clearing system, and that allows you to easily move stocks and cash like back and forth with ease, because every single company that's a part of the ACAT system is a DTC participant. And if they're a DTC participant, they have a DTC participant number that's like 4 digits. So they're able to just move it back and forth, and that's why they're all technically shares under Depository Trust and Clearing Corporation. Whereas with shares held a computer share, it's withdrawn from the DTC and directly registered with computer share. And computer share, if your shares are held in book, as far as I'm aware, are not in reference to a DTC number. But computer share does actually have, like, if you look at the DTC list of all the numbers, they do have a DTC number. But that's where I think, like, okay, that's plan. And the heat lamp situation, where in times of high demand, the Depository Trust Company and Clearing Corporation, or Depository Trust and Clearing, yeah, Depository Trust and Clearing Corporation, DTCC, has the ability to borrow shares from ComputerShare because they could just send it through the ACAT system because ComputerShare has a DTC number. But if your shares are in book, then it's outside of that. That's my perspective, at least. Feel free to look deeper into that. But that's a little bit on the ACAT system and just some of my latest thoughts about DRS. And I'm very curious what the DRS numbers are going to be in the next report. I'm very curious what the wording will be. Will it look like this? Will it just say like this many shares are held at ComputerShare? Will there suddenly be a dramatic difference? Because just the same that it's barely changed, I would also find it strange if like out of nowhere like DRS just like, goes up like 50%, right? Like it's like 1.5x, like the most recent number. Like all of a sudden it goes from like 76 to like, let's say like, I don't know, like 130 million. I'd be like, well, that's freaking strange. Like, how did that just happen out of nowhere? I don't think there's anybody that just bought that many shares and suddenly directly register them. I think of it as like a lot of individuals continuing to buy and just consistently register over time because they like the stock. And that's what I've personally done. The only share that I don't really have in ComputerShare are shares in IRAs. And, I accept that and it is what it is. And then I have my one put that I sold. And then if I do get exercised on it, where I wind up having to buy the shares at that said strike price, then fine, I'll buy 100 shares at that price and I'll directly register them because I like the stock. And that's why I sold the put in the first place, because I wanted to earn some high interest yield. Because when you sell a put, you keep the premium for the put you're selling, like the price, like you sell it and it's like, I don't want to go all into like selling options, but it's basically if you're above the price, if I sold like, let's take Apple stock, for example, right? And if I sold, or let's use a smaller share price, right? Let's say Palantir. If I sold a $20 put for Palantir, what that means is I need to put in $2,000 of cash. Let's say I sold a $20 put, going to expire in 1 year from now. I would have to put up $2,000 cash in that account, sell the put. Let's say the put is going for $2, right? Or so if I sold the put, I have $2,000 in the account. I now get $200, right? But I can't touch that $2,000 because now it's locked up in case it needs to be executed upon, where you'll have to buy the shares at that agreed price of $20. So then I would get 200, and now I have $2,200 accumulating interest. So I've gained the 200 for selling the put, and then on that 2,200 underlying, I can earn 5-ish% interest on the underlying cash in the meantime. So then when it comes time for the due date, if Palantir is above $20, I keep all the money I've accumulated interest. I keep the $200 I got for selling the put. And with that, then I've now profited. But let's say Palantir is at $15 a share at that time. I still keep the $200. I still keep the interest. But now I'm forced to buy Palantir shares, 100 Palantir shares at a price point of $20 per share. So technically I'd be at a loss at that time because Palantir would be at $15 and I'm then buying the shares at a previously agreed upon price of $20. But I would look at that as like, okay, well, I still got the $200 premium and I still got all the interest I accumulated in that time. So yes, I'm down on the position technically, but like I at least made money leading up to it. And if I believe in Palantir long term anyway, then it's like, who cares? I got 100 shares at a lower price than at the time I had sold that contract. That's a super quick crash course on selling options. But again, I don't want to say like the particular one I sold for GameStop, but I sold one put because I just think it's going to be higher than that price at expiration, which is next January 2025. And then if for some reason it's not, so be it. I'll keep my interest. I'll keep the premium. And then I'll acquire the shares. I'll acquire 100 shares at a said price point. So whatever happens, happens, right? And that's why I did it like that. But that's where my head's at. Hope everyone's having a good night. Thank you so much for tuning in. Let's hit the chat one last time. No, you missed it. Oh, trade 385. Yes, trade 385. All right, 1 second. Let me pull that up. 1 second. Let's see if I can find it. Okay. I guess we'll just scroll through Super Stonk real quick because it's like the first thing that came up. So yeah, it's obviously hot topic. Ring bells. Shout out to you if you're here. I know you've been here before. Proven Bill is officially aware of Trade 385. Yo, I just saw your post. Never heard of Trade 385. Do you have any source documents? It's crazy. I've never heard about this. Yes, I have them. Okay, so anyone might explain this briefly? Apex Clearing's mishandling of the sell side of two equivalent proprietary trades by an unidentified market maker that occurred within the same period. Whoa, hold on, sorry, I just lost my train of thought. Which occurred in the same period. All right, let's start over. Apex Clearing's mishandling of the sell side of two equivalent proprietary trades by an identified market maker has occurred within the same second on January 27th, 2021. The buy trade was 385 million and the sell trade was 385 million. By Apex logging only the buy, but not the sell, the gigantic buy trade fake spiked volatility and the VAR giving Apex Clearing a defaulting calculation they used as an excuse for issuing an emergency position close only buy freeze uh, directive for GME and movies to the 100s of retail brokers. It clears on January 28, 2021, when Apex Clearing finally logged the 385 million sell trade after being stuck in an overnight acknowledgement. It wiped away their defaulting calculation. In other words, it wiped away Apex Clearing's excuse for freezing GME. Would you look at that? Isn't that crazy? Yeah, Apex is a huge one. They clear for Webull. They clear for Robinhood. I don't know. They still do for Robinhood. But because when I work in the back office, sometimes we have to submit stuff. People put like, oh yeah, like I'm transferring from like Webull, and we're like, okay, like yeah, but we're submitting to Apex because Webull doesn't actually process the transfer. And when you process a transfer, you use the ACAT system, right? Typically, when you're going stock to stock. Obviously, if you're directly registering, it's different. But let's go back here. Let's see what else we got on this. This is crazy. How do you claim earnings? Is this really real? I saw people posting this. I thought it was just like bogus, but they really posted missing the earnings when the earnings didn't even come out. Like that's crazy. And there's so many headlines. Yeah, March 19th, 2024. Crazy. Would you look at that? What a world we live in, right? And there's so many people that read headlines that probably just thought like, oh yeah, like that's the actual earnings. That's what's crazy. Stuff like this. Let's be more closer, closer. Misleading title. Asked whether there was a program in place to censor information that could lead. Okay, whatever. That's not 385. Oh, see if you guys want to email me. There you go. I didn't realize that was there the whole time, but what is it? Trade 385. Let's see what else we got here. Get ChatGPT to summarize it. Honestly, DRS Jimmy, not a bad idea because that's part of what I use ChatGPT for. I think it's great for summarizing information, or sometimes I'm like, hey, make this simpler, explain in simple terms, and it just helps me understand things. And even writing an email sometimes, I'm like, grammar correct and improve. I won't just blatantly copy and paste the email, but I'm like, oh, yeah, that's actually probably a better way to word that. That makes more sense. Let me make it clearer to the client before I email them. What I miss, Marantz? You're good, man. No worries. You're just in time. But no, thank you so much for tuning in. I appreciate it. Sorry, I just saw your message now, but if you're still here, man, I'm just getting back on track. I'm working on getting back on track. I've been slacking too long. You've been doing so much out there. Like I've been keeping an eye, and shout out to you, Marantz. Like I really appreciate all that you put out there, and just watching some of your stuff has definitely helped me learn stuff. So I appreciate that. Hi Tetron, Sharon. Hope you're doing well. Thanks for being here. Everyone's saying hello. There's a prediction model for DRS that would be 100% registered, but I'm going to have to see. Good evening, Tetron. Chad, thanks for popping in. Hope you're doing well. Do you watch Jackie? Hey, he's always here. I love that. No, who's Jackie? I'm not too sure. But say prediction model for DRS that would be 100% registered, but I'm going to have to see. Yeah, no, I do remember that. And I think that model was made very early on, where it was obviously like a huge wave of DRS of people initially doing it, and it hasn't been quite the same since. But yeah, it's interesting with the DRS numbers. I definitely want to see like what they look like on the next report before I think too hard about it anymore. But it's definitely always something on my mind. Curious case of Trade 385 by Apex Clearing. How failing to manually acknowledge a 385 million sell trade on January 27, 2021 led to GME being frozen at hundreds for retail brokers. Oh, it's just a meme, but Apex Clearing was not at the congressional hearing. Congress, looking at the manipulation, probably saw the Apex close buying in there hundreds of retail brokers from 11 a.m. to 2 p.m., 3 hours, which in comparison, Robinhood looked minuscule. Nevertheless, they should have been at the congressional hearing. Denier should have been there because he is legitimately smarter than everyone at the hearing and could have explained the position he was in that day at Webull, one of Apex retail brokers. Robinhood, on the other hand, inflicted massive manipulation, stopping buy for GMA owners for an entire week. This is a fact backed by Congress, so a full paid position close only for entire week in GMA owners. If an owner is defined as someone with one share, and Robinhood's post January 28, 2021 limits until February 5th, where if you have a share, you are banned from buying. According to Congress itself, this is de facto position close only on Robinhood customer, GME customer. Robinhood was rightfully at the congressional hearing as they represented 10% of the market. There's no doubt about it. They were allowed to cause massive manipulation. The question of no one here could ask the last year is about Robinhood's margin on January 28th. Specifically, why the hell was it 65% of it movies? This isn't up for debate. Look at margin breakdown by the stock from the U.S. House Senate Committee on Financial Services Report. Mean market event. I understand people will cite the distraction theory and say the movies was being pumped. Maybe they were. I've never really paid attention to it. The stock evidently helped it, if not led the charge in pushing Robinhood into default. The giant collateral pie piece causing the position close only on GME. That pie piece could have been used to keep GME buying open. In summary, it doesn't really matter which stock pushed Robinhood into default as long as Robinhood was pushed in default, triggering the crazy high excess capital premium, risk deterrent charge, solidifying the position close only determination, basically. That is why Apex predicament is so interesting. The problem with bringing this up here has traditionally been someone now commenting, "Hey, are you pushing popcorn?" No, I'm not. I'm analyzing what happened on a day 3 years ago. Of course, you have to keep the conversation about two stocks completely separate because they both have separate circumstances past January 28, 2021. But we have to be able to talk about what happened in January 2021 buy freeze, and if movies was 65% of Robinhood's margin, that needs to be talked about because it pushed Robinhood into default, causing position close only on GME. Interesting stuff. Again, I feel like this is one of those things where I was saying before, I don't want to comment too much. I want you guys to think what you will of this information, but I think it's certainly interesting information. Like, you got to take it all in, right? So I have to digest that a little bit more, but that's pretty interesting. I don't remember that 65% of Robinhood's margin was attributable to movies. Those who aren't aware, this individual ringing bells is referencing AMC, and it brings up a great point towards the end here. Of course, you have to keep the conversation about the two stocks completely separate because they both have separate circumstances past January 28th, 2021. Very true, right? Look at GameStop stock price performance versus AMC. It's crazy. AMC, from its peak, I think is literally down 99% at this point. So if you bought near the very top, like, you've literally lost almost all of your money because of the amount of dilution. And it's sad, right? Like, my girlfriend loves going to the movies. So, like, I want to take her, and I'm like, no AMC. But it's like, it's like I don't want movies to go away. Like, I think movie theaters are a cool thing, but it's just reality of what's happening and things moving away from that. And not only that, it's like how AMC has been managed, and it's completely just withdrawn like every penny by just diluting like an insane amount. Just keep raising capital and keep not operating efficiently, right? And I think inevitably they're probably going to go bankrupt with just the way they're going. And it's sad, right? Because in terms of like the movie aspect of it, but like when you look at what management's doing, it's like it's deserved. Like, not deserved, but it is what it is, right? But the idea, and that's where like the emotional side was tied into it, with like people who were investing in AMC, like, oh, but I love the movies. Who doesn't love the movies with their friends or family on a good weekend, a good movie coming out? It's so good. And it's like, okay, but yeah, it's emotional. Like, you're not, look at the numbers. I mean, I'm going on like a different tangent here, but just wanted to bring up that, like, whatever you think about all this, it is important to remember, like, they are two very different companies and have gone two very different directions since early 2021. But yeah, let's see. Day trader who claims he supports GME, Tetron AMC to the moon, Randy like games. I absolutely love AMC. Is Adam Aaron still around, or did you go back to or did he go back to the 76ers? Yeah, you know what's crazy? I know Apollo's involved, or Adam Aaron's involved in the 76ers, but the group that owns the 76ers also owns the Devils, like the hockey team, and like that's my favorite hockey team. So I'm like, damn, that sucks. But I mean, you know, whatever. I'm just watching them for the hockey, right? I can't switch teams at this point. I'm too loyal to them for too long. But yeah, no, I think I'm gonna pretty much wrap it up here. You know, this little move here, you might saw this, like, oh, what's going on? That was just markets reacting to Jay Powell speaking, and markets doing markets do, right? So it's crazy. What a world we live in. But zooming out, you know, GameStop is still much higher than the beginning of 2021, right? Like, if truly individuals didn't like the company and nothing was happening with it, I think it would have been a situation where GameStop would have already been below $5 by now, if that was the case, right? And if they weren't making necessary changes, then their chart might be looking more like AMC, right? Like, look at their 5-year chart. Just brutal. Absolutely brutal, right? It was at 21, and obviously this is all split adjusted because AMC was never at 600, but they did the reverse split and somehow managed to, oh yeah, the reverse split is the way. And then there was Ape, right? Like, it's just sad, like, the way people have really been screwed on this with just thinking like, oh yeah, like, I like the movie, so I'm gonna buy some AMC stock. But you know, for those that went through that, it's like you got to live and learn, right? And experience is very helpful in the market. That is for sure. So, yeah, all right. I'm just kind of rambling at this point, but thank you guys so much for watching. Really appreciate it. It was a pretty solid stream. And by the way, I am going to be live for GameStop earnings. I took the day off of work. I'm going to try and start streaming early on. Just do some fun stuff throughout the day because I took off work anyway, so I might as well do the most I can, right? So definitely be streaming on the day of earnings, going right into it, live reaction, all that. And for the earnings, whether it's Monday night or right before, but like, I'm going to put out some official like Tetron prediction numbers, you know, just some rough estimates, and, you know, encourage everyone else to put their own estimates out there because these analysts put out these bogus estimates. And when you follow a company closely, I think you have the right to put out your own estimates as well. You don't have to necessarily put them out there. You don't have to post them if you don't want to. You can if you want to. My point is, like, just for your own like improvement and going about things. All right, like, I'm expecting this. Like, I think we might see this, and then compare like what you thought might happen to the actual report, and then next time try to be a little more accurate, etc. And I'm just documenting my journey, guys. It's really all I'm doing. But great stream tonight, man. Grinded out 2 hours. Yes, sir. Ryan, it's crazy. Every time I'm like, oh, I'll probably start wrapping it up. And then I was like, oh, I'll keep going. And then when I got to this and I realized how long this is, I'm like, damn, this is going to be a long stream. But I think we were due for a long stream. So thank you guys again for watching. I appreciate it. Have a good night.